A very good evening to all of you. On behalf of BCIC, we welcome you all for this session on input tax credits, landmark rulings under the erstwhile law, which are yet relevant but are being overlooked. The Chamber expresses its thanks to Mr. Jatin Christopher, partner, JCSS Consulting, for accepting our invitation to address at this session. Thank you very much, Mr. Jatin. The session organized under the aegis of Indirect Taxes Expert Committee, chaired by Mr. Badrinath, partners Singhvi, Dev and Unni LLP, Mr. Arun Ramachandran, Head Finance, Tax, Tata Consumer Products, Ms. Mamatha Anand, partner Indirect Taxes, Deloitte, Touche, Tohmatsu, India, and mentored by Mr. P.V. Srinivasan, partner and chief mentor PVS Advisors, and Mr. Shivadass, senior advocate Shivadass and Shivadass Law Chambers. The Chamber acknowledges the support of our member organization for their support by way of sponsoring all the events for the year. Messrs. Bueller, Continental, Fundamax, IAMPL, MTR Foods, SDMIMD, Sona Group of Companies, TVS Motor, Vishwas Group, and Wipro. Thank you very much to all of you for joining the session. I now hand over the platform to Ms. Mamatha. Over to you, Mamatha.
Yeah, thank you, Rupa. So it is with great pleasure that I invite CA Jatin Christopher, who is the founding partner of JCSS Consulting, to address this forum today. And Mr. Jatin has over 25 years of experience in advising the clients across sectors as indirect taxation. So we look forward to this session where he will be enriching us with his knowledge. Sorry, am I audible? Yeah. So we look forward to this session. I would also like to welcome each and every participant and thank them for taking their time out. And I now hand over the baton to Mr. Jatin to take this session forward. Over to you, Jatin.
Thank you very much. I'm very pleased to be on this platform, and very grateful for BCIC for inviting me to come and address members on this very important topic of decisions under the earlier law that has a bearing as far as the tax treatment in GST is concerned, with specific reference to input tax credit. I will not burden participants with excessive technicality, but bring your attention to some first principles that we need to bear in mind when we look at GST input tax credit. And as we get into this, some opening remarks about the limited extent to which earlier decisions have a bearing on GST. While bringing about this legislation, no less than a constitutional amendment was needed. We'll all have to keep that in mind so that one does not get carried away, as we have seen tax officers guilty of this, to consider GST as VAT and service tax with a new title. A lot of instances we have seen where the treatment has proceeded as if this is the same old law with a new title. So we'll have to be tremendously circumspect about what extent of the earlier jurisprudence we will need to permit entry into GST, and to what extent we will need to deliberately deviate from the tax treatment extended in GST. So we'll have to call out a few areas where things have changed, call out a few areas that things have remained. Because after the constitutional amendment, you can see deliberately the words used in the statute are not the words that were used in SENVAT credit rules or in the VAT law. because clearly the legislature wanted to give a meaning that's not allowed in the past, that these expressions had received in the past. So let's look at, I'm just requesting members to be very mindful that what are the things from the past that we're permitted to bring forward into GST? What are the things from the past that we ought not to bring forward into GST is something that we'll have to be very, very conscious, because those who had many years of experience, Mamatha was very kind in her and generous with her introduction about the many years of experience that I have, but a vast majority of that experience is under the earlier law. So I am susceptible to the effect of those many years of work done in the earlier law that will unconsciously percolate into my understanding of GST. And we should do that, be conscious of that. I mean, all of us who have many years of experience under the earlier law need to bear this in mind. Having made these opening remarks, let's get quickly into some of the decisions that we have to look at. There's one decision, very interesting decision of Daiichi Karkaria Limited versus Collector of Central Excise. The issue there was this decision in Supreme Court came up after a lot of anxious consideration that this matter had received in a few other decisions. I remember one of the very probably the first article I wrote and published somewhere, it was in 97, was on this issue. There were decisions of Attic Industries, there was a decision of in-cab Industries, and then there was Daiichi Karkaria of Delhi High Court, which was then carried to Supreme Court and they later got affirmed. What is going on here? We'll quickly analyze. If you look at accounting standards, para 6 of accounting standard number 2 states that cost includes all expenses incurred to bring the goods to their present location and condition, including taxes and duties within brackets other than those subsequently recoverable from a taxing authority. So when we claim input tax credit, it's a tax we have paid at the point of making an inward supply, but permitted to be adjusted when we effect an outward supply in the future. Therefore, creditable taxes, input tax credit, is not part of cost. When input tax credit is not part of cost, why then do we pay it to the supplier when it is not forming part of our cost? What happened in Attic Industries and in-cab Industries was, in one instance, the manufacturer was claiming credit and then he discontinued claim of credit. In another instance, manufacturer was not claiming credit and then started to claim credit. Where credits were not being credits were being claimed and subsequently discontinued, department said your assessable value of your finished product should increase, because by discontinuing claim of input tax credit, mod VAT credit at that time, has an effect of increasing your COGS, cost of goods sold. Therefore, your assessable value should increase by the same extent. In another instance where he was not claiming credit and then started to claim credit, the assessee demanded that the assessable value be permitted to be reduced, because claiming credit has the effect of lowering cost of goods sold. Both of these were agitated and matter reached in Daiichi Karkaria. It came up for consideration by the Delhi High Court, where the court said it is true that by claiming credit, cost of goods sold decreases. By discontinuing claim of credit, cost of goods sold increases. But in central excise, at that time where we had the normal transaction value, the court said cost of goods sold and assessable value of manufactured goods are not connected to each other. Cost may increase, cost may decrease, but your assessable value will not undergo any change. This was such a profound, I mean, today it is so obvious. A lot of young people who have studied central excise in final and then GST since 2018 find this so obvious. But can you imagine, this was such a debated topic that it reached the Supreme Court, and Supreme Court said, yes, this is how it is. Cost of goods sold and assessable value have no bearing on each other. Now, how is that relevant in the context of GST? It is relevant in the context of GST for the reason, for a multiple set of reasons. One is that goods and services both are admitted as credit. Two, there is some language in section 15(2) that talks about adjustments to the valuation. So therefore, we will have to be tremendously careful. What happens to someone who claims credit? How does it have a bearing on the taxable value in GST? In central excise, we had assessable value. Now it is taxable value, the transaction price. Why are these decisions relevant? Is because costing adjustments cannot be made a basis for valuation adjustments in GST. To the extent input tax credit gets impacted, we should bear in mind that in valuation, it should not have a bearing. Couple of application points for this could be someone claims input tax credit. It sits as a current asset in the balance sheet. The question is, if this current asset is baked into the pricing. Let's take an example of an EPC contract. What is the costing on which someone has arrived at the tender price? If you look at the costing, you might even find that all-inclusive costs have been included to arrive at the tender price, because the tenderer knows that there's going to be enormous discussions and negotiations to ensue. So he has found some basis to bake all the costs into it. Therefore, the Aichik Karkarya comes in tremendously handy in GST. Cost of goods sold, whether the basis on which cost of goods has been arrived at and the transaction value, can they be connected or not? We have this authority from the Supreme Court to say that they don't. So therefore, when we have investigations, when we have audits in GST, there's a proclivity of tax authorities to get into costing, especially EPC contracts, especially when you have open book contracts. When you have transactions like this, there's a lot of transparency companies follow in maintaining cost data and perhaps even transparently sharing cost data with clients. So in those instances, we need to be extremely vigilant that the tendency to accept the tax already discharged in self-assessment and then bump it up and attempt to bump it up further by these adjustments, we find that very often taking place in GST. So therefore, we will need to see how the two are unconnected with each other. Next. If we look at instances where reversal of credits, until we've had the new 3B form, there was no requirement for us to claim the entire admissible credit, available credit, and reverse what is inadmissible to retain the net credit. Now the question arises is, if I have, let's say, a credit of 100, I'm supposed to reverse 10, and I have therefore claimed, I'm eligible to claim only 90. Does it mean that I should claim 100 and reverse 10, or does it mean that I'm permitted to claim 90 and assert that 10 has already been reversed? I'm sure many have received notices for common credit reversals stating that, look, in your financials, you have in your GSTR 9 annual returns, you have exempt turnover. And I don't find anything in reversals in table 7, reversals under rule 4243. I don't find any reversal. So therefore, the allegation is that you have not complied with rule 4243. Therefore, please reverse this credit. There's a decision, I think 183-83 in Chandrapur Magnet and Wires, where Supreme Court said reversal of payment of output tax is equal to reversal of credit. The instance there was manufactured goods were not liable to excise duty. There was some confusion in trade whether certain processes amount to manufacture or they don't. Here was an instance where a manufacturer had discharged excise duty on manufactured goods when excise duty was not applicable. So the demand raised was, look, you're liable to reverse the credit because that credit itself has not was not available in the first place because your product is not exigible to excise duty. Supreme Court said, look, he's paid output tax in today's terminology. He's paid output tax when it was not payable. What he has paid as output tax by utilizing mod-VAT credit is nothing but reversal of the mod-VAT credit. Chandrapur Magnet opened up floodgates of lot of conservative tax positions where, I mean, look what's happening. If I think exemption is available and I don't claim credit, tomorrow, if that credit gets, if the exemption is disturbed by an interpretation coming from a higher court, how will I claim any credit? Because the time to claim credit will have gone. Now, if I go and claim credit, whether they will allow it or not. So therefore, a lot of instances where when in doubt, pay excise duty was the message. When you're paying excise duty, claim all the credits that are consequently also doubtful and you are safe. This became the approach. Now you please keep what happened in Chandrapur Magnet and today you consider what is being done with 2A, 3B and 16.4. So therefore that brings us to a very interesting circular number 962. It was issued in 2012. There was a decision of Formica India division. I'll give you a little bit of detail about how this decision came about and then explain what's in the circular. What happened was someone claimed exemption on his finished product. Because the finished product is exempt, he had not claimed credit. There was some other decision in someone else's case where it was decided that that exemption should not be allowed. Therefore, output tax excise duty was demanded on the manufactured product. When excise duty was demanded, the taxpayer, the manufacturer, was hit with a double whammy. One, he had lost credit. Two, he is now facing a very real possibility of an output tax demand that is about to be confirmed against him. At this time, Formica India Division, Supreme Court said, if output tax is payable, input credit should be allowed. I'm just using current language so that it does not create any confusion by using language from the past. If output tax is payable, then credit should be allowed. As long as output tax not being paid was not an impossible interpretation, that means a bona fide view was taken. What is a bona fide view? A view that is supported by lower courts, a view that is shared by lower courts. Courts have said, yeah, you're eligible for exemption. Taxpayer has not unjustly adopted aggressive interpretation to claim exemption. He's taken a very balanced view and come to the conclusion that later a High Court or Supreme Court overturns. Formica India Division said, no, you can't hit him with a double whammy. You have to admit credit. Then Maruti's decision also came about affirming that view. Circular 962 basically said, whenever there is doubt about exemption, which is resolved and exemption is claimed without claiming credit, and later the decision is over, the claim for exemption is overturned by higher court, credit that could have been allowed should now be allowed. Now you please see what the circular did in the past that today has become so bothersome. The taxpayers today are saying that 5% without credit, 18% with credit, I will play around depending on how much credit is at stake. But please bear in mind, there's a departure in the language today. If you look at explanation to section 11 in the GST law, very clearly it says when there is a conditional tariff, it is not optional. Although the jurisprudence of the past said conditional is optional, in GST, there's a deliberate departure. So therefore, friends, today, when we look at 16.4 cases, where there's a belated claim of credit. I will just, there are a number of exceptions. Section 16(4) that places a time limit on claim of credit has a number of exceptions. There's an article I'm trying to publish with about 9 exceptions. Whenever there are exceptions, then the restriction will be directory and not mandatory. So I will only leave you with this thought that consider 2 situations. Someone has filed all their returns for the whole year within due date and has missed claiming credit on one particular invoice. Let's call this belated claim. It is belated claim because whenever he realizes that this invoice has been omitted, attempts to insert it in the next ensuing return and tries to claim it now. This would be a belated claim. Another is a case where returns are not filed. Returns are filed after a substantial delay with late fee, of course. And when those returns are filed, all invoices are included to claim the credit. So we'll call this belated returns. 16(4) in my reading of the law hits only belated claims and not belated returns. I'll leave this thought here and we'll continue further. We have a number of issues to consider. Now let's look at another situation. This came up in Amrit Agro. What happened in Amrit Agro was this cum duty calculation. We have that in Rule 35, where it says whenever you have you're hit with a demand, unless you have not collected tax from your customers, you can claim cum tax benefit. Basically, assume that the price collected is including tax. If you have collected a 100 and 18% is the rate of tax, it will be assumed that, for simplicity of mathematics, 82 is the basic price, 18 is the GST. This will help marginally reduce the burden of the demand. 18% of 18 will be saved. This is called cum tax calculation. In a number of instances, cum tax benefit was allowed. Scores of cases, cum tax benefit was allowed until Amrit Agro reached the Supreme Court, where Supreme Court said, look, cum tax benefit cannot be allowed in all cases. Cum tax benefit cannot be allowed in all cases because first we have to establish that the price charged is including taxes. If the price charged is including taxes, then and then only can cum tax benefit be allowed. So today, if you see anyone claiming cum tax is hardly allowed cum tax computation unless it can be established that it is inclusive of tax. But bear in mind, 76 in GST law plays great mischief. If someone claims exemption when the price was including taxes, will have to come clean to show whether they in fact collected anything as tax or they did not collect tax. Quick example could be goods bearing MRP. Goods bearing MRP, when they are sold at MRP, does it mean they have collected output tax through the MRP, or they have not collected output tax when even though they have sold at MRP becomes a question for consideration. Where will this have an application? Let's take an example of a hospital who bills their inpatients for medicines and consumables bearing MRP, because large hospitals have their own ERP system, which does not permit alteration of the price of medicines consumed and administered to inpatients compared to the price at which the same medicines are sold in the pharmacy. It is possible that MRP goods are being billed at MRP, although healthcare service as a composite supply is exempt from tax. So consider it from that point. Another very interesting issue that has come up now, especially after Justice Shah's decision in Morarji Gokaldas. It's a new decision, not an old decision. We're referring to some principle from the past to look at an old decision now. Take an example of someone has been sanctioned refund. Someone's been sanctioned refund. As soon as they were sanctioned refund, department realizes that that refund ought not to have been granted. Whether it is Rule 89, all those refunds that everyone's claiming nowadays, exports, supplies to SCs, all zero-rated supplies, IDS refunds, wherever credits are being claimed as refund is sanctioned, money is disbursed, assessee has received the money. Now department changes their view and states that this refund ought not to have been granted. Department has three options here. Option one, file a departmental appeal under 107(2) against the refund sanction order. Refund sanctioned is not correct, so department will file an appeal to first appellate authority stating that that refund should never have been granted. Alternatively, the refund order can be taken up in revisionary proceedings under 108. Third, a show cause notice can be given under 73 or 74 stating that that refund was erroneously sanctioned. As you can see, the language in 73 and 74, one of the 5 cause of action is erroneous refund. Now, what the position of law in the past was based on number of judgments. Let's say refund is sanctioned and department goes on appeal against the refund sanction. Supreme Court said refund sanctioned has not been disturbed. The interpretation of law has been carried in appeal, first appeal, second appeal, maybe appeal to revision petition to High Court and then to Supreme Court. Once a decision is reached, all that decision departmental appeal has achieved is that there is now finality on the interpretation of law. The procedure for raising a demand continues to be 73-74 only. When department files an appeal against a refund sanction, it is not under Chapter 15 of the GST law. Therefore, the interpretation has been resolved, but demand fails. Circular 432 was issued to state a dual notice procedure. Department goes on appeal and issues show cause notice. They issue the show cause notice, but keep it in call book without adjudicating until the departmental appeal is finally resolved. Once the departmental appeal is finally resolved, they'll bring that interpretation into the refund show cause notice and confirm the demand to recover the refund. This was a position 432, so circular of September 1998. Now comes this judgment of Justice Shah in Morarji Gokaldas to say, no, you don't need to give show cause notice when departmental appeals are filed. Here the concern is when department goes on appeal, it may take a certain amount of time. Taxpayer may be confident about what is going to happen in this, that nothing adverse is going to happen in this departmental appeal. But the taxpayer already has now a contingency around the refund that is already sanctioned and received. Now, what should the taxpayer do? Is there any provision explicit in the law to make this payment under protest? There is no provision. So therefore, my concern since Morarji Gokaldas is, it's not yet a reported judgment, but online you'll find this judgment, is that this concern can become very worrisome every time refunds are sanctioned. Now, refunds sanctioned, I would sense that in more than 50% of cases where refunds are sanctioned, especially 17-18 and 18-19, there is taxpayers know that there is something nebulous about the entitlement to refund claim. Department has time to file appeal. If you look at section 112, Section 107(2), first appeal, 6 months time can be condoned by another month. If you look at second appeal to tribunal, assessee's appeal has a time limit, but departmental appeal, any delay does not have any time limit. So a word of caution, all those who have filed refund claims of input tax credit and been sanctioned refund, two things need to be done. Step one, wait for 6 months to see if department will file appeal against the refund. Two, find out from the department if in review, because commissioner review, in review, refund order has been accepted or not. There is nothing final until limitation passes in GST. So therefore, we need to be extremely alive to what is the limitation. So as soon as the refund is sanctioned, there is some amount to celebrate, but there is still some amount of concern to find out what further action department is likely to take in the matter. I'll give you an instance. Very recently, one case, we came across one instance where refunds have been sanctioned for the last 4 years. And substantial amount in excess of 100 crores have been sanctioned as refund. The small amount of about 4.5 crores where the department has rejected the refund because a new officer has assumed charge. And the refund has been rejected, stating that this is the place of supply is not within India. Therefore, you have not satisfied the conditions. Now, the question is, what happens to the 100 crore plus refund that is sanctioned to date? Which of the three routes will the department take? What happens if they have in review accepted, but is the doors of section 108 revisionary proceedings closed as far as the refund that is now discovered to be erroneous is concerned? Friends, refunds is not a matter of, is not to be considered as a compliance matter. Yes, there is a compliance piece to refunds to put together the invoices, the documentation, compute the formula, etc. But please bear in mind, nothing is final until the limitation passes. So until limitation passes, one has to be vigilant to see if there's any movement in the in the case within the department to overturn the favorable order that has reached the taxpayer. If you look at circulars, you hear a lot about circulars. Some very happy about circulars issued in GST, some expressing angst about how many circulars are being issued. The third is circulars issued to state that the ambiguity in the law will be resolved on what the government calls as is basis. Those who have not paid the tax, we won't bother them hereafter. Those who have paid the tax, we won't refund the money to them. As is basis resolution of these past demands. When you look at instances like that, we will need to consider how binding are board circulars on officers. Of course, under 168, when circulars are issued, it has to be complied by the field formations. It's a very interesting decision of 2008, CC Bholpur versus Ratan Melting and wire industries. What happened in Ratan Melting was, until Ratan Melting, there was a decision of Dhiren Chemicals which said board circulars are final. Once the board says that this is the interpretation to follow, functionaries within the department cannot sit and judge the circular. The purpose of a circular is to ensure uniformity. Right or wrong, board circular contains the interpretation of the government. There are any number of instances where we would have seen even an advantage. Let's say there's an advantageous interpretation in a board circular. We have argued in tribunal that once board has issued a circular, department cannot go against the circular. Dhiren Chemical said exactly this. Come Ratan Melting, 2008, Supreme Court said, What if the board circular is contrary to a court judgment? What if a board circular is contrary to the interpretation of law laid down in a court by a court? Now, why is decisions of court so significant? Is because of this Blackstonian doctrine. What does it say? It says when a court interprets the law, it does not interpret the law prospectively. A court provides the interpretation to the law since the date the law came into force, because the court is only explaining what the law always meant. Therefore, when there is a judgment rendered after a circular is issued, and that circular is contrary to the judgment in para, if I recollect right, para 7 of this judgment, Supreme Court says a officer of the department is duty bound to deviate from the circular and issue process, demand, show cause notice, adjudication, etc., contrary to the circular. And they even go on to say that the reason why officer is welcome to disagree with the circular is because there is a judgment of a court that is different from the interpretation contained in this circular. Court goes on to say that only when the officer disagrees with the circular will the dispute reach the court. Because if the circular is favorable to taxpayer, taxpayer will not deviate from that interpretation. And department is now not allowed to deviate from the interpretation in the circular. So the matter will never reach the court for its consideration. So court said, nothing doing. If the circular is contrary to a court decision, officer is welcome to deviate from this. I'll give you 2-3 applications for this in GST context. Following this Ratan melting, board issued circular 1006 stating in so many words that this para of the judgment says that officer is welcome to deviate from the circular. Now, friends, the extent of certainty we were expecting from board circular stands eroded with Ratan melting. How many circulars do we now have in GST relating to input tax credit? I don't want to go into other areas where circulars are there, but relating to input tax credit itself, how many circulars are there? In addition to circulars, we have social media posts, press release, GST Council minutes. We also have flyers. I mean, it's very unsettling that there are so many ways. The reason why government has used every mode available is to disseminate information to taxpayers. This is welcome. The flip side is that so many things are said in so many places. Now you're not sure which one is binding, which one is not binding. I'm happy to inform you that none of them are binding unless they are directly covered by a judgment of a court. So therefore, and the application point, one of the application points would be rely on board circular at your own peril. So I would even add, please be very careful when someone cites a circular and says that that's the last word. To silence any debate, citing a circular is not the best recourse. I have 2 other concerns around this emanating from Ratan melting is because there are circulars issued and withdrawn. Classic is circular 105. Circular was issued talking about discounts. Circular was withdrawn without stating whether that contents of the circular were wrong or whether the circular was considered not necessary because the law itself is explicit, completely silent as to the reasons why, but circular stands withdrawn. But please bear in mind, when a circular is withdrawn, the interpretation, the ideas, the views, the various scenarios that were considered in the circular have not vanished. They still remain somewhere in the cloud somewhere, isn't it? Why is it so impossible for a tax officer to adopt those same interpretation and make it his own and throw that interpretation at the taxpayer? If you go back to Circular 105, you'll find very, very interesting ways of looking at first principles of contract law, Sale of Goods Act, residing in that circular. So therefore, friends, please be extremely circumspect when the last word on any interpretation in GST is founded on circular. If a circular is the bedrock of any interpretational conflict, then you are on slippery ground, because circulars are what they are as held in Ratan Melting and in Circular 1006. Next, burden of proof. Okay, before I get into burden of proof, continuing with this question of what is the correct interpretation, we've seen as far as circulars are concerned, whether they are contrary to any court decision. I want to bring your attention to one more important provision of Indian Evidence Act, Section 56. Section 56 talks about judicial notice. If someone wants to has a question whether Evidence Act applies to taxation, Supreme Court in 1998 AIR in Chuharmal Tarakeshwar Mohanani's case has said that principles of evidence law are applicable to taxation also. Referring to a Bombay High Court judgment in 94 ITR 616, they have said that it applies. 56 of Evidence Act basically says a court can take judicial notice of the state of affairs in law, science, technology, art, etc., etc., etc. How is that relevant when administrative quasi-judicial proceedings are being carried out? What we call judicial notice in 56 is also referred to as official notice in non-judicial or quasi-judicial proceedings. The implication is that if I go and make one assertion before one regulator about the facts of a particular case, I cannot come before a GST authority and make a different assertion. A very simple example would be, let's say, commission paid to director has been subject to TDS under 194H. I think it is H. 194H on commission. If the taxpayer has deducted TDS under 194H in respect of commission paid to director, the same company cannot come before the GST authority and say, I will not pay tax on reverse charge basis, because the fact admitted before income tax department is that it is not subject to TDS under 192. It is under 194H. Therefore, here it cannot shy away from the burden under entry 6 to 13/17. And we can go on any number of examples to look at what assertions are made. The reason why I want to bring this up is to introduce this aspect in GST, which is gaining so much traction in the department that is not very seriously being considered by trade in my reading of the provisions, reading of the practices. There was a Delhi High Court decision recently. A company in Delhi, an appellant, the petitioner was in Delhi, which was a branch of a company incorporated in UK. All right, company is in UK. That company has a branch office in India, and that branch office is engaged in some IT services. The dispute was very benign, very simple dispute, whether you're eligible for refund of ITC or not. In the course of these deliberations, Delhi High Court said it is not intermediary services, it is IT services. Therefore, place of supply is not under 13(8)(b). place of supply will fall under 13(2). So everyone is very happy about it. But if you really look into this para 2 and para 4 of the Delhi High Court judgment, the facts recorded indicates that the assessee in India was a branch office and the customer in UK was the head office. If you look at section 2(6) of IGST law regarding export of services, clause 5 very clearly says that the two actors involved, exporter and the customer, should in fact be distinct and not mere establishments of each other as per explanation to section 8. So friends, when you're looking at interbranch activity, especially in cross-border trade, we should be extremely aware that information has already been disclosed by the same assessee to other regulators. Let's say there is a permanent establishment outside India, income tax returns are filed outside India. Out of the contracts that are signed by the Indian company, certain amount of income attributable to PE. I don't know much about this, but I just leave it at that. There's some amount of attribution to the overseas PE. Taxes paid in the overseas jurisdiction. Cost of running those branches, those PE, is remitted from India. What is the implication of this as far as GST and distinct person is concerned is extremely concerning. The reason why we have to do this is because it brings us to the next point to consider is the concept of burden of proof. If you look at section 155 of GST law, very clearly it says anyone who claims input tax credit, the burden is on such person to establish his entitlement to credit. See, entitlement to credit is 16(1), 16(2). Entitlement to credit is not 17(2), 17(5). So therefore, this question of burden of proof is tremendously important. Then there's a judgment of Ecom Gill. All right, Ecom Gill, very recent judgment. Although in the context of section 70 of Karnataka VAT Act, Supreme Court has made some very far-reaching statements in this decision about how to discharge burden of proof. A few things to say about burden of proof. The reason why I say a few things is because 50 sections are dedicated to relevancy of fact in evidence law. From 5 to 55, burden of proof itself, relevancy of facts itself has taken away 50 sections in evidence law. So that is how important it is. Normally, nothing spectacular needs to be done to discharge burden of proof. Let's say members, all of us got up this morning and got busy with the activities of today. If someone were to say, please prove if you had breakfast, you may not have proof. I would even go one step further to say you should not have proof. The fact that you have maintained proof itself is causing me worry. Such an ordinary everyday transaction, how come you have maintained this extent of proof? The more compelling the evidence, the less believable it will be. The reason why I bring this up is it directly touches section 155, section 16(2), and all the notices that are flying around as far as input tax credit in GST is concerned. Please bear in mind that in GST, a deliberate departure is palpable in the concept of vested right of input tax credit. You know, Eicher Motors, JM and Company's judgment. Decisions were divided under the earlier tax regime to say whether input tax credit is a right or a concession. The debate has still not been definitively resolved. Every time you find government arguing on this in, let's say, VKC footsteps, etc., there were a lot of affidavits and counters filed by the government in Gujarat High Court and then in Supreme Court also, where the affidavit says that input tax credit is a concession, input tax credit is a benefit, input tax credit is not a right, etc. clarity is required, and I suppose deliberately clarity is not emerging as to what is the real nature of input tax credit. To my mind, input tax credit, if it is capable of settling output tax liability, then it has to be an asset. If it is an asset, then it has to be a right because it is enforceable. An asset that is not enforceable is a nullity in law, which is the grievance I have about virtual digital assets. Although the name uses the word asset, it's not an asset because you can't enforce it in a court of law. Decentralized is the heart of virtual assets. So therefore, mere use of the expression asset in the title in income tax does not make it an asset. So if you look at it from that point of view, input tax credit, to my mind, is a right. And if you go back to look at Maxwell on interpretation, it talks about how rights become perfected. See, rights are start off being inchoate or in formation. They're forming. Input tax credit, as soon as I make an inward supply and as the preconditions, 16.2a, 16.2a, 16.2b, these are all preconditions. Post conditions, 16.2c, 16.2d, 16.4, second proviso, rule 37, these are all post conditions. As pre and post conditions get fulfilled, right, become vested. So I'll quickly say this. Conditions, vesting conditions, if they are not fulfilled, operate as divesting conditions. Vesting conditions, if they are not fulfilled, they operate as divesting conditions. Since output tax liability is accepted by setting off with input tax credit by the government itself, input tax credit that is perfected has to be a vested right and an asset and not a mere concession. Post conditions can still keep this right in a state of flux. But when all the post conditions, what is the last of the post condition? The last post condition is actual use in business. If ultimately, when I purchase it, it was intended for use in business, but eventually it did not get used in business, but got diverted, then the last post condition will have been violated, and therefore the inchoate right will remain an unvested right and liable to be recovered. So if you look at it from this point of view, input tax credit is a right. How do you prove the right? Certain things should not have proof. Certain things should have proof. If you look at Ecom Gill, it respectfully addresses certain things. There's one thing I wanted to mention here. A decision, a court decision, is a precedent for what it addresses and not for what else it could also address. That's the law of precedent. A court decision is a precedent only to the subject matter that it addresses itself to and renders a decision. The decision cannot be cited in some inapplicable subject that was never in its consideration at all. Many times when we cite decisions, taxpayers expect a reply to notice to be loaded with decisions. I've even heard people call up and say, is there any case law on this subject? The law is still falling into place. Things are still settling down, but people are already hunting for case law. And there are some courts that have rendered decisions while disposing of writ petition. And somehow we are sort of leaning on it as if that is a revision petition and a binding precedent. There's a very limited conspectus that each case concerns itself with. So therefore, we should not extend the ratio and apply to all. See, the object may be different, but the subject matter should be the same that it covers. So when you look at this principle, you will find that very few decisions are available as binding precedents that lay down the law accurately. And wherever decisions have been in favor of taxpayer, most of them have reached Supreme Court and they are pending. Classic is safari retreats. There are some who are relying on safari retreats and waiting for a decision by Supreme Court. Some who have not relied on safari retreats. Some who have taken advantage of safari retreats, availed credit and even utilized it. So therefore, friends, when you look at burden of proof, this decision in EcomGil is all over the place as far as what all needs to be considered in those in the set of facts in that particular case, and come to a conclusion that merely providing invoice, bank payment proof is not sufficient discharge of this burden. I suppose it is a good thing that the court has not ventured to give a exhaustive checklist of what are all the things that are needed to discharge burden of proof, because if that were given, it would have been a Herculean task, because it's not possible in law and certainly not in a tax law to have a one size fits all sort of a checklist of universal application to cover all situations. But what EcomGil does is it raises this question that a tax officer can make as his own and allege that burden of proof has not been satisfactorily discharged. I have the invoice, my supplier has filed GSTR1, goods are delivered, supplier has paid tax to the department, I have claimed in my returns filed within time, and I have paid the full invoice value to my supplier. Can we say that these 6 make up all the conditions to discharge burden of proof? Where is e-way bill? Where is goods receipt note and inspection report? Burden of proof varies based on facts and circumstances. So that brings us to this aspect as to who has burden of proof. If you go back to section 155, it only talks about entitlement to credit, not the claim. And when the law is explicit about entitlement, all other matters, burden of proof resides on revenue. That brings us to the next section of evidence law that we can consider and discuss. That is section 101. One who makes the assertion bears the burden of proof. If department says 2A is not matching with 3B, what are they saying? Some third party data is not matching with first party's data. That's all they're saying. But what the taxpayer is doing is taxpayer is throwing his might behind that problem and furnishing reconciliation after reconciliation, extensive amount of information. When you offer an answer, it implies you have accepted the question. Section 58 of evidence law says undisputed facts do not require proof. In the context of GST law, allegations left undisputed become fact. Allegations left undisputed become fact. So therefore, friends, when you consider it from this point of view, you will see over-enthusiastic and fearful taxpayers have taken up investigation from the department on subcontract basis. All the department needs to do is to just throw a bone at the taxpayer, raising some questions about something done in self-assessment, and taxpayer is uncontrollable. He's just launching himself into doing reconciliations, and submitting workbooks and pleading his innocence and parading his innocence. But please consider what's tremendously important is to find out who has made this allegation. Has that person adduced evidence in support of the allegation? Until the one who makes the allegation has made out a prima facie case, no need to enter merits and offer a rebuttal. But who is to explain this to the taxpayer? Because taxpayer has a concern that protracted litigation is undesirable in business. And I'm completely with you on that. If anyone believes that protracted litigation is undesirable for business, but the moment someone has taken GST registration, they have entered the water. When you enter the water, you're bound to get wet. And when your name shows up on the radar, whatever, 61, 65, 67, when your name shows up on the radar, no officer in his right mind will agree with everything the taxpayer has to say. For no other reason, if it's possible, someone should look up the CAG's fifth report of Central Tax Department and see what kind of observations have been made by CAG about the discharge of executive functions under GST by the central government, and you will find CAG has been so uncharitable, unforgiving even as far as deviations are concerned, that a scathing indictment that report makes up. But if you look at the role of CAG is to do exactly this. The perils for an officer is to agree with your answer. So therefore, please be tremendously cautious when over-enthusiastic replies are offered, that it can come in and present itself as a problem in proceedings later. Another place where extensive replies can be counterproductive is when favorable orders are received, whether in adjudication or first appeal. In 108 revisionary proceedings, the wealth of information that lies hidden in taxpayer's own reply can be relied upon in revisionary proceedings to overturn the taxpayer's favorable orders. So friends, please be very careful. The right amount of explanation is sufficient. Many times we believe that a 100-page reply is a good reply and a 10-page reply is not a good reply. I've seen young chartered accountants come under severe pressure to produce a 100-page reply. After increasing the font size and the spacing, they start repeating themselves. This is not some essay competition. This is not some high school exam where you're judged by where length of the answer is also one of the metrics. But please consider what is necessary in a given situation is to first establish whether the allegations have been supported. If the allegations have not been supported, please permit the revenue to make out their case before you start taking up their job on subcontract basis and start filling in the blanks in the guise of reply to notice. When you look at it from this point of view, you will recognize that a favorable reply is also not final. An unfavorable reply is anyway not final. So therefore, taxpayers need to be very careful that if your name shows up on the radar, it's going to go into some sort of a litigation, first appeal, revision, so on and so forth. So therefore, have a slightly medium-term plan as to how things will play out. From a taxpayer's perspective, although you don't want any notice, you want all the compliances done perfectly. I'm yet to meet in these last so many years that I've been in this line of work to find a taxpayer who has impeccable records. I mean, a case in point would be the number of companies with who rank very high on governance that have gone in for SVLDRS option, that scheme that the government introduced to resolve legacy disputes. The number of companies who score really high on the governance, on their own governance standards, that have gone in for this SVLDRS option is simply unsettling and disturbing that so many companies who have high governance standards have thought that this is a good way to wrap up this outstanding litigation. Some possibly to buy peace, some to bring closure to these matters, and also perhaps their lack of confidence as to how things will play out and the timelines for it to play out. So therefore, friends, please be very mindful that we need to have a medium-term strategy for every proceeding that is initiated by the department with respect to any aspect of GST, especially the aspect of input tax credit. I won't go into Circular 183 because that's something that's come in new. It does not touch upon the decisions from the past. But what is important is to consider how credits were allowed in the past and how credits will be allowed in GST. There is a marked departure in the jurisprudence. So therefore, we should enlighten ourselves about the extent of difference so that we are not disappointed that GST is not like what I thought it was, and or what it should have been like because of how GST provisions are being read. This brings us to this other aspect of does GST have some basic principle, basic philosophy? I'd invite members to consider the decision of the referee judge in Dharmender M. Jani. It's a GST judgment, but in this judgment, the referee judge has made a statement to say there are no such principles that we can find in GST. GST is a destination-based consumption tax. GST, that destination principle applies to goods as well as service. The All India Taxpayers Federation decision principle. Dharmender M. Jani very clearly says there is no such principle. There are about 26 different principles that have been identified to say that these are the principles in GST, and there are about 13 different principles that are commonly assumed exist in GST, which in fact do not exist in GST. I just named 2-3 of them so that you get an idea. GST is not a destination-based consumption tax. There is no statutory provision. In fact, there are provisions that point the other way, that GST is not a destination-based consumption tax. GST input tax credit is a vested right, but government is fiercely contesting that it is to be disputed. Input tax credit is not an inherent indefeasible right. It will vest after all the pre and post conditions are fulfilled. So if you visualize it from this point of view, some amount of unlearning, some amount of clearing the air as far as, in that sense, I think I am, full credit to Badri for thinking of this topic, because it's sort of unusual to be able to bring decisions of the past and see what extent they are relevant and where GST may have gone the other way so as to leave some of those decisions behind, although they may have been very popular and very fiercely cited in various appeals in the past. When you look at another interesting aspect from the past would be Circular 1053. This circular was issued in 2017. It's a very elaborate circular. You could even call it a master circular. There are so many aspects in Circular 1053/2/2017, 10th March 2017. This circular contains all the principles that have emerged after litigation reaching Supreme Court, which the government has accepted and put down in the form of this circular. Although this was circular issued in Central Excise, some parts of the circular have already been published as a GST circular. A case in point would be circular number 31/5/2018, 9th February 2018. This circular contains some parts of Circular 1053 to state how notices will be issued by audit and DGGI, who will do adjudication, what are monetary limits, what are extended period of limitation, what is call book. All these instances are found in this new circular. But please look at the master circular of 2017 and expect that that treatment will be followed even in GST. One judgment I can think of was from Jharkhand High Court in NKS services. NKAS services, where the Jharkhand High Court accepted that the principle of Circular 1053 continue to operate as far as GST is concerned. So if it's looked at from that point of view, going back and doing a deep dive into Circular 1053 can illuminate our minds as to how notices will be issued, how they'll be adjudicated, when will notices be issued under 74, when will they be issued under 73, what is call book, how will cases go into call book, so on and so forth. How does a taxpayer inform the department that she does not want to claim credit? There is no compulsion to claim credit. How does a taxpayer inform the department that she does not want to claim credit? The only way permitted in law for a taxpayer to make this disclosure is by omitting to include that credit in 3B. So I hope you're able to appreciate omission to include credit in 3B has an affirmative assertion to it. It has a very clear statement of intention of taxpayer that I don't want to claim credit. GST, as you know, is a self-assessment based tax regime. Taxpayer is the master of his own determination of liability. Taxpayer says, I want the supplies I am making are goods and not services. That's a self-determination. It is taxable. It is not exempt because election, I elect to take one course of action implies that I have with equal force elected not to take all other courses of action that were available at that point. So if a taxpayer claims that it's a mistake, I forgot, how can you punish me? It is human to make errors, etc. It's understandable, but legally speaking, it's a contradiction. I myself went and told that this credit I don't want to take. Today I am saying that no, I made a mistake. I want to take this credit. We have a little mind changer here, it seems. This is borne out in the fact, I mean, there's some judgments also from GST which we'll look at. But if you look at section 7512, it's a very powerful section, I would say. Because 7512 very clearly says that there's no need to issue a show cause notice to take recovery action when the arrear is undisputed. Arrear means it's a liability of the past that has remained undischarged, and now it is even undisputed. Number of judgments, Mahadev Construction from Jharkhand High Court, Reflex Industries from Chennai, LC Infra Projects from Karnataka High Court. All these judgments said, no, you can't do that. If there is a demand, you have to issue a notice. You cannot simply make a demand without a notice. But look at what happened with Morarji Gokaldas, where Supreme Court said there's no need for another notice. The departmental appeal itself can conclude with a notice. So there are divergences. Government, looking at these decisions, did not make provision, but went ahead to insert an explanation to say that when taxpayer has filed returns under 37, admitting some liability, and then does not discharge the admitted liability, it is an undisputed arrear. So friends, although output tax is not the topic of our discussion this evening, the information there will illuminate our understanding as far as input tax credit here is concerned. Taxpayers receive ASMT 10, then they will receive pre-notice inquiry, then show cause notice, adjudication, appeal, so on and so forth. ADT 1, department comes in to do audit. They will issue ADT 2 with some observation. INS 1 is issued under 67. Department comes in for inspection, extending it to search and seizure under 67(2). When department takes up these proceedings, limited to input tax credit, you will find that an assertion is made by the department that some mismatch exists and you are liable to pay tax. I would submit that the taxpayers should, I'm sure tax professionals understand this very well. Taxpayers need to consider that being unequivocal about your position is important. Taxpayers don't normally deny allegations by department in a very clear language. There is a soft denial. There is sometimes even an abstinence from responding to inquiry from the department. But this does not solve anything. This adds to the confusion. It perhaps fuels the officers' thinking to believe that taxpayer has sort of accepted this liability. So I will suggest two things. First, whenever there is a allegation, in whichever shape or form it comes in, whenever there is an allegation, make your position known. Make your position known. How do we make our position known? I dispute the demand. I reject the allegation. No, I don't want to use these two words, dispute and reject. I don't want to use. Can I use some other synonymous expression? Pick your poison, but be very clear about what you're going to say. I'll give on a lighter note, if I were to give an example. Let's say you ask your team member to come in tomorrow at 9 o'clock. When we ask this question, it may be presented in the form of a question, but it actually is a statement. There is no option at the end of this. Knowing this, the team member does not say no right away, because if I say no right away, then I'm going to have to deal with the reaction that is going to come from you. So I will say yes for now and give an excuse tomorrow morning at 9:30. Please don't do this in taxation. Be very clear. No officer will get upset. Our role here is not to please the officer. Our role is to cooperate with the officer, make the stand known, so the officer can now decide what her next move is going to be. Can't be vague and iffy about our answer and assume that the officer is somehow going to forget about your case. Everything is driven on the system, so therefore no one can forget you. You're such an unforgettable taxpayer that no one's going to forget you, at least not so lightly. So therefore, it's important to make your position known in an unambiguous, unequivocal manner. I would advocate, I dispute the demand, I reject the allegation, full stop. Because is not at all required, for the reason that there's no need for any explanation, because your explanation is not going to convince the other side, because the other side is not interested to be convinced. Make your position known and permit them to do what the law requires them to do next. Time will come when notice arrives, answers have to be provided. I've seen taxpayers enjoy elaborate replies. I even venture to say this, that a long answer is invariably a wrong answer. If there is something worth being said, it can easily be said in a few short sentences. But if you don't know what is to be said, that's when long-winded arguments are presented as if the length of the submission is somehow going to persuade the other side that there must be merit somewhere in here. Believe you me, I've had the benefit of very kind and transparent disclosure by tax officers that they are extremely displeased when lengthy submissions are presented. Lengthy submissions are not even read. You may have even noticed this, that submissions made are requested in soft copy, and all the submissions are parroted in the order, with the conclusion being what the department anyway wants to conclude. So therefore, please make your position known as regards input tax credit, how it has to be addressed, where do we have to stand, what is it that we want to say regarding the input tax credits. We take a few more examples regarding input tax credit and some of the new aspects. There was a question that popped up on the screen and now it went away somewhere. Maybe we'll do this later. I'll take someone's help to figure things out. Let's take some new examples, something that was not done in the past that's found its place in GST. One is, of course, payment to creditors. If payment to creditors is not made within 180 days, that credit is liable to be reversed with interest. But when you look at the arguments against this provision, it's all highly commonsensical. But I'm sorry, in GST, three things are of no use: common sense, logic, and experience. Which is why I'm sort of distancing myself from taking credit for vast experience that I'm supposed to have. My vast experience is in something that's not GST. All of us have only 5.5 years of experience in GST. So in that sense, we're all learning from each other, and I'm only happy to expose my vulnerabilities before knowledgeable professionals in practice or in industry, so that you don't make the same mistakes I have made. At least you will get an insight into what sorts of mistakes I'm making, so that you get to make new ones and not the ones I have already tried and hurt myself badly. Payment to creditors within 180 days, taxpayers' grievance is that how can the statute specify the time limit by when I need to pay? Don't I have the freedom to enter into contracts with longer credit period? Contract law makes it very clear that contract cannot be contrary to law. When they say in 23 public policy, it's not just some serious deviation or some heinous object of contract, etc. It covers all areas of applicable law. And if the law says that within 180 days you should make payment, it's only a condition. The law does not say you're not free to contract for extended credit period. The law only says that I will not give you credit. You contract for a very extended duration of time, doesn't matter. Credit will not be allowed if the payment is beyond 180 days. So therefore, taxpayer has to choose to claim and reverse credit in the same month to save from interest, and then reclaim this credit whenever the payments are made. Taxpayer is not compelled to choose between two bad options. Taxpayer only has this new condition. The reason for this provision, the merits of that reason, in today's time and age, such a condition is not desirable. These are all matters of policy. Wisdom is seen in the comment made by Chief Justice in VKC Footsteps. He said that we are not going to enter into the policy domain. That's for the government to look at. We will stick to judiciary. So I suppose from our point of view, if Chief Justice of the highest court says that he will not enter policy domain, you can't expect Deputy Commissioner to agree with your impeccable reasoning as to why this provision ought not to be given any consideration. This is a new provision that's there, so this is something we'll have to understand. Another interesting aspect to mention is that credit notes. I think this is a good platform for me to bring up this question of credit notes. I think everyone understands this animal called financial credit notes. It's basically a credit note that is admittedly not as per Section 34. For whatever reasons, it's not within the time limit under 15(3)(b), or it's not 1:1 as per Section 30. Whatever are the reasons, credit notes without GST is what this animal financial credit note is, it's a credit note. What does a credit note do? Credit note reduces the sum payable by the creditor. Credit note only reduces the sum payable by the debtor. Excuse me. The debtor has to pay that much lesser to me. I have issued a credit note so that my invoice has to be will be settled less than this. I invite you to please consider three possibilities. Possibility number one. Section 63 of contract law permits. This happens only in India. This is not the English law of contracts. It is possible to accept 90 rupees today, then wait for 1 year to collect 100 rupees. But mind you, this is an option that's available with the promisee, not with the promiser. So the supplier cannot decide to do this. It has to be from the promisee side, the customer side. The second option is when there's a credit note that is issued, financial credit note that's issued, it indicates unilateral or bilateral. So we have to examine whether the write down in the value of the receivable is unilateral or bilateral. If it is bilateral, then we have shelter under section 63. The third possibility is there is a cross-cancelling supply. I'll just quickly tell you what a cross-cancelling supply is. I have supplied goods to a customer and the customer has supplied some services to me. It's not a barter. I have sold goods to him for 100 and I have availed some services from him for 10. Therefore, I will pay 90. Therefore, I will pay 90 to the supplier. Now, the question is, when two supplies cancel each other and the net payment alone is made, then that is not a case covered by Rule 37. Rule 37 basically flows from second proviso to section 16(2). Basically, it says that you can reverse your credit if you don't pay your suppliers within time. When a financial credit note is given, department's position is that this is liable to reversal of credit. It may not always be the case. It may not be a case where the payment is reduced to this extent, but there is a cross-cancelling supply. It's a long discussion about what are cross-cancelling supplies. I suppose this crude, quickly invented example conveys the point, but in your own facts, you might be able to find instances where there are two transactions. Another instance to mention as regards credit notes is concerned. The reason why credit notes are important is because recently in Tata Motors case, the position that existed in the past of Muhammad Ikram Khan has come to be affirmed. And the very interesting, the operative part sits in para 70 of Tata Motors judgment of Apex Court, where it says basically warranty transactions can be effected in two ways. So there is a manufacturer, there is a customer, and there is a dealer. Dealer holds tax paid parts. Customer arrives with a complaint which the manufacturer accepts, instructs the dealer to replace the parts. Dealer replaces the parts, customer goes away without making any payment. Muhammad Ikram Khan said it's a sale of parts by the dealer back to the manufacturer. Para 70 lists out two situations, Roman 1 and 2 in Tata Motors judgment, to say this could be one possibility where therefore there's going to be a tax incidence. But there could also be another situation where the manufacturer sends the parts to be replaced to the dealer, which the dealer replaces in the equipment of the customer, and that concludes the warranty claim. So everything turns on facts. What are the facts? And invariably, this situation that is visualized is rare. It doesn't happen as often, especially when the number of claims are more, tax paid parts are used, unless the claims are of the equipment is of such a specialized nature that it's not possible to introduce those store those replacement parts as freely, and it has to be requisitioned specifically whenever such claims come in. The reason why we have to visualize this is because a lot of tax rates, taxes and input tax credit can sometimes be much more than the margins in a transaction like this. So therefore, the market is credit hungry. The market is craving to find every avenue that is possible to juice out some credits. Couple of more points, and then I'll hand it over to the organizers to see if some questions that I need to respond, because there are way too many things to address. Consider this possibility that you're looking at, take your own business, your own practice, or businesses that you're very closely familiar with the facts. To what extent should you have blocked credits? If you look at section 17.5, it contains specific exclusions. It contains subjective exclusions, objective tests and subjective tests. I'll give a small example. Let's say there is a services business, IT services, non-IT services, a people-centric business. It has revenues of about 5,000 crores. 5,000 crores revenues. Let's say 30% net margins. Very well managed business. Being a people-centric business, it will invariably incur a lot of expenses towards its people. Not just food and beverage, but a variety of things, not just food and beverage and transport, but a variety of things that this business incurs. What percentage of ITC should be blocked credits in this business? Based on each industry, based on the profile of people, you can identify what might be the expense. If I were to hazard a guess, I would expect a blocked credit value of about 75 crores. 75 crores of input tax credit should be blocked, which means 2A should be more than 3B to the extent of 75 crores every month. Now, what is the extent 2A is more than 3B? Hardly. The gap is not this much. In fact, it could even be the other way around. So therefore, when we look at input tax credit from the past, one thing that is very significant in GST is that it's not human intelligence that is the basis for verification, validation, and challenge to taxpayer self-assessment. There is some machine-based intelligence that is at work. It's unmistakable. I mean, the kind of notices that is coming out, it can't be that a handful of people are sitting somewhere and cranking out innovative ideas. Some of the ideas are so alarming that it could not have come from anyone but a machine. But some are equally alarming on the other side, that it completely sweeps you off your feet to think that there could be one bright spark somewhere sitting and analyzing each sector this way. Government has made no bones about use of technology in data mining, data analytics to generate reports. When data comes out, if you see data that used to come out 2-3 years ago was crude. Today, there is a great amount of refinement in the data coming out, and every passing year, you can only expect more and more insightful learning. So a services business, 5,000 crores revenue, if it should have around 75 crores of block credit, and in our business, we are looking at 10 crores of block credit, then there is something going on here. It can be only one of two things. One, credits that should be blocked are being rechristened in a different HSN code and being saved, or there is blatant claim of credits that ought not to have been claimed. Friends, please bear in mind, the adversary is not a human being anymore in GST. There's so much of data available on the portal. There is so much of experimentation going on that you will find a majority of notices that contain rubbish, and that majority is rapidly changing sides and becoming more and more insightful. But somehow taxpayer's response has been the same. Taxpayer parades his innocence and is blinded by the truth. We can't do this any longer in GST. All the decisions that we have been evaluating from the past, they will come in, but they will only come in handy much later. It's not like you cite a judgment and that can shut someone up. You cite a judgment and it can shut someone up. 75 years, customs law, the development of this law is much older than this. If you look long and hard enough and search properly, for every impossible interpretation, you will find at least one interpretation, one judgment to support your view. So therefore, let's not abdicate thinking to judgments. We have to look at judgments, but we have to make our own views, interpret it on our own, come to our own conclusions, arrive at our own answers, and then see if there are judgments that support this interpretation or not. Because until then, we will find that every step of the way, we will be met with disappointment because there are that many decisions that are available on both sides. So what will prevail is how do we harness the power of decisions that were rendered in the past that laid down the first principles that are visibly present in the GST law and bring those judgments. And wherever GST has departed from the past and made deliberate changes in the language so as not to allow the concessions that were available in the past, we have to be live to those issues to see that we can't bring those judgments here. And I think long answers are now more than ever will prove to be counterintuitive and wrong because the answers are not going to be based on how well one can explain the position, but how revenue's case can be demolished by really questioning the validity of the proof they adduce in support of those allegations. I thank BCIC for this opportunity and all members for your participation. Thank you all very much.
Thanks so much, Jatin. Thank you so much. It was wonderful listening to you as usual. But yes, first things first, I'm sorry, Jatin, I was late. I didn't dial in time. My apologies for that.
That's okay.
I'll take it from the last what Jatin mentioned. It's like as he said, anything that you want, any interpretation that you can think of when you read something, either within the GST now, okay, within GST is little, but if you dig into central excise, service tax, VAT, customs, I'm sure there is some ruling or the other that will support your thinking or counter your thinking, either way. So I fully agree with you, with him when he said, first state or think what you believe is right, then look for support in the judicial precedents. Never do the reverse. Never do the reverse. Because reverse is, I'm sure you'll hit a dead end in the reverse, right? So yes, there are quite a few things that Jatin touched about. Thank you so much. Very important rulings that you really spoke to us, Jatin. They were, when Jatin and I spoke about this topic, in fact, he complimented me for thinking about this topic. I will reverse that. Jatin, it was you. I mean, he suggested saying, let's talk about case laws, which are landmark rulings from the erstwhile laws, which are no longer considered. I just gave it a small twist saying which are relevant today or not being considered. That's all. There are so many concepts from the erstwhile laws which are so directly comparable to the current GST framework. Some of them could be, the valuation piece where we talk about cost plus 10%. the time limits to claim the ITC, because that has stood the test as far as central excise and service tax is concerned for some time. Later in the day was the VAT laws. And one more, I don't remember the name of the appellant there, but recently we had a CESTAT ruling which said, where the invoice was issued beyond 14 days by the service provider, the recipient was made responsible, saying it is not a valid invoice and therefore he is not eligible for credit. That also may come up as far as GST is concerned. Chandrapur Magnet is a wonderful ruling. Thank you, Jatin, to share that piece with us. In the same breath, let me say one more thing, one more concept which has kind of come into GST from the earlier laws is penalties. Gone are those days when, penalty, we said, while I won't say it is gone, so let me try and rephrase that. It makes it a little difficult to say discretionary. There are no discretionary powers in GST as far as penalties are concerned. It's just an Excel formula. It is like act-if relationship to kind of levy a penalty. So yes, thanks again, Jatin. There are a few questions. I'll just read them out, Jatin.
Okay.
I'll just read them out for you. I'll go in the same order as it is on the screen. The ITC claim means the amount posted to the ECL. Is that right?
Correct. If it does not show up in the electronic credit ledger, then it is not claimed.
Then self-assessment tax paid based on the books of account result in some ITC being not reflecting in 2A. Does this claim attract interest under 50?
See, if credit is not claimed in the electronic credit ledger, then there is no interest in respect of credit which has not been claimed. Credit may have been claimed in the books of accounts. That will be erroneous, but unless it shows up in the credit ledger, it's not an admissible claim. So there's no interest liability.
Sure. Recently, intimation were received from Hyderabad restricting ITC to the extent of taxable turnover by applying the ratio on total turnover to exempt turnover under section 17, right, with 42 and 43. Perhaps the exemption turnover is actually zero rated turnover. In such a scenario, is proper officer right in restricting ITC?
See, this is a notice in Telangana that they are using some analytics to do some linear calculation. But if you see, actually last 5-6 years, this linear comparison has been used to issue notices. 26AS is not matching with ST3. R1 is not matching with 3B. Linear comparison, because such linear comparison has yielded so much of revenue because of this fearful and the foolish. Fearful and foolish taxpayers have queued up outside the department to submit reconciliation or pay up those demands. That department is emboldened. No such formula-based demand is valid. The demand is not valid, but the officer raising the demand has jurisdiction to raise such a demand, provided the response is also based on law and not surrendering to such linear comparison. That must be kept in mind.
I'll just mention just one thing here. Jatin also mentioned to all of us saying collection is a right. Collection of tax is a right. Right. This again comes from the earlier law. So there is one ruling with respect to a government contract which came out recently. Of course, the old law, where they said, look, the contract never provided that service tax could be collected from the customer. But the court went beyond the contract, saying, look, you ignore the contract. Given that service tax is a indirect tax, there is an inherent right that it can be collected, irrespective of what is there in the agreement. So yes, this will again be challenged, I'm sure. This is a CESTAT ruling, so I'm sure it will be challenged further. So I'll go to the next question now. Whether Once again. Oh, Manjesh has a question. So can jurisdictional officer assume the role of audit officer and issue ADT 02? And can ADT 02 should stand in the position of an SCN under 73 or 74, or a separate SCN has to be issued? I think this is one of that where, it's lovely to hear Jatin out, because I've heard this from him earlier.
See, audit requires a general or special order under 65(1). Officers who are designated as jurisdictional proper officer, their role is very different. If it is central tax, then audit under 65 is only authorized to officers in the audit commissionerate. Audit 1, Audit 2 and Mysore Audit Commissionerate, only those officers will do audit in the central tax department. In state, audit officers are sort of empowered to do a variety of tasks, but under 65 and then 73, 74. So therefore, jurisdictional officer in VAT, what is in state administration, what is called the LGSTO, that officer does not have jurisdiction to do audit under 65, unless by a specific order they've got a under 65(1), this officer has been designated, but normally that is not done. So your jurisdictional proper officer cannot issue ADT 2. Secondly, ADT 2 is not a show cause notice. If you see section 65(6), ADT 2 is only the conclusion of the audit in the form of a report. 65(7) says if the findings in the report are not accepted, then the officer has to issue a notice under 73 or 74. So yes, a separate show cause notice under 73 or 74 is compulsory. Without show cause notice, there is no question of any demand being raised by the officer.
Thanks, Jatin. Next one is relatively easy, so I'll only answer.
Your audio is sort of something's happened to your audio, I think, Babu.
Really?
Now it's okay.
Oh, okay. So next one is rather easy, so I'll only answer that. Whether blocked credits are blocked in the concept of cross charge also? Yes, it is. Whether OIA passed by JC appeals could be revised by him on the request of the SSC?
This is a practice of the earlier tax regime. Please look at the contours of section 161, very limited part. Mistake apparent on record. It should be apparent. 1 + 1 = 4. Mistake apparent on record. Anything that has a consequence on the demand. I'll just give you an example. A stunning error was committed by central tax officers. A demand of 37 crores was made, and the demand was please pay GST. Now it does not say whether CGST, SGST or IGST. So we find a rectification application saying you please tell me what is this animal GST, because I need to know under which column I need to make the pre-deposit to carry the matter in appeal. So the officer wrote back saying, please pay whatever is payable as per Act. That is all that I wanted. Carried the matter in appeal and insisted that the appellate authority drop the demand, because this is nothing. This demand cannot be saved. There is no chance of saving this demand. Now the appellate authority is perplexed as to what to do with this demand. So coming back to this question, JC appeals cannot revisit. Revising means reapplication of mind, reconsideration of the evidence to reach a possibly different conclusion that is barred in law. Once you reach a conclusion, that's the end of, officer, the JC appeals is rendered what's called a functus officio. He is denuded of authority to reapply his mind and enter the files again. Any clerical mistakes he can, any apparent errors he can correct, but nothing beyond. Your remedy is only to carry the matter in appeal. And mind you, if any officer promises you, don't worry, sir, nodakoltivi. If any officer gives you assurances, you would be a fool to fall for it. I'm sorry I'm using this strong expression, but I'm cautioning you that please don't entertain any assurances because no instrumentality of the state has authority to offer deals. That bus has left. Those laws have gone. No such authority in GST.
Maybe another 2 or 3 more, Jatin. That's all before we wind up.
Again, your audio, something happened.
Maybe 2 or 3 more before we wind up for today.
On
Belated RCM payments attract 16 for limitation. Example 17-18 RCM paid in 23-24 on payment basis.
No,
yes.
no
Oh,
RCM payments for whichever year you can pay now. 16.4 does not apply to RCM payments. It will time limit to claim credit starts from date of payment of RCM.
But only caution there is interest will trigger. As per your deliberation, terms of agreement for more than 180 days will not affect or result in failure to pay under GST provisions.
I'm not sure if I got the question correctly, but I will just repeat what I said. If you have a contract that has 270 days credit period, don't take the credit, but immediately reverse it and reclaim that credit after 270 days. If your contract itself says 270 days, don't take the credit and after 180 days wonder what you should do. You know that you're not going to pay within 180 days. So please, but don't avoid taking it itself. 16.4 will come into the picture. Take it and reverse it in the same month and then wait for credit period to pass to restore this credit.
Absolutely. So Sudhashri, in summary, irrespective of what the credit period you've got from your creditor, 180 days prevails. Items given freely against the target to customers, ITC can be claimed or not, because this is not personally consumed by the supplier and it is not a gift also.
Since it is not a gift and it is a permanent transfer of property, you have to pay output tax because you are giving it to your own customer. Please take ITC but pay output tax.
I'll just take one last one. SCN is issued by the same officer who conducted the audit on issues or observations which are the outcome of the audit under 65. All right.
See, what's happened is there's a matter that's already pending before Karnataka High Court where the state GST department has this practice because center has already segregated the notice and adjudication functions in para 6 of circular 31/5/2018. State officers had this practice in VAT, so they only do the audit, they only issue a notice. But now practice in Karnataka is if you raise objection that it should not be this officer, another officer is issued assignment to do the adjudication. One officer, 1.1 will issue the notice, 1.5 may do the audit. I'm just giving this example, will do the adjudication. But if you don't object, then the same officer will preside over notice and adjudication.
So somebody has requested that I take one specific question. I'll end with this. Proper officer negated the citation when quoted DY Brethil case for doing adjudication by saying in the said case, both supplier and buyer fall in the same jurisdiction. And in our case, both fall in different jurisdiction and took stand of Mahindra Feeds and Seeds case and said finally the buyer needs to prove the filing of return and payment by supplier. Is this acceptance of one case which is in their favor adopted and refused to accept the case which is in dealer's favor? However, Mahindra Feeds case is pending before 2-member judge of the Supreme Chennai Court.
See, in DY Bethel, what happened? See, as soon as we find the first sentence that seems to be in our favor, we should not start celebrating and quoting it as binding precedent. In DY Bethel, far greater damage has been done to the petitioner. What has happened? They got a show cause notice. They carried the matter to High Court. High Court simply told them that the show cause notice now must now include the supplier and then the demand must be confirmed. The medicine killed the patient here. So therefore, please don't rely on DY Bethel. It is not a resolution of the issue in 16(2)(c). It's a relief that is molded by High Court in writ jurisdiction. So therefore, officer is well within his powers to reject decisions that are somewhat in taxpayers' favor. In fact, his job is to reject your decisions.
So Jatin, with this we'll end, and I've missed a few questions. I'm sorry, guys. But yes, thank you, Jatin. Thanks so much for your time. And as usual, as always, I would say it's a pleasure, getting into a discussion with you. Thank you so much, Jatin.
Thank you.
Rupa,
Thank you
are
for
you
the
there?
opportunity.
Done. Thanks,
Hello.
Jatin. Thank you so much. Yeah, Rupa.
Thank you very much, Mr. Jatin, for addressing at this session, and which was very exhaustive. So we will share the queries if we receive anything pertaining to the discussion had till now. Thank you very much once again. Thank you, Mr. Badrinath.
Thank you.
Thank you. Thanks, Jatin.